Warren Buffett, number one investor in the world. No, it isn't a secret, it isn't inside. Today I will tell about 7 rules that Warren Buffett used in his investment strategy. And one of those rules I mentioned in my previous video. Subscribe right now on my YouTube channel and stay updated. Everyone believes in those myths. A stock equal to a lottery ticket. The more I trade, the more I will earn. Low PE, cheap and profitable. The key is to predict news or interest rates. Diversification solves everything. Leverage will make me rich faster. If the prices drops, I must sell immediately. And all of that is nonsense, because Buffett made billions in a totally different way. He has one important thing: he wait and he invests in the long term. But here's his rules. Rule number 1. Think like a business owner. A stock isn't just a number on chart, it's a share of business. Look at owner earnings, not the stock price on your app. An example that when market is going down, everything is going down. One of the best examples is Amazon company. When Amazon was profitable and Jeff Bezos is reporting about that stocks, he say that his company is going to drop down in value, but the company making the money all the time. And that's not reflect the real business value. Rule number 2, the circle of competence. Buffett only buys what he truly understands. A simple business model, predictable drivers, everything else is off limits. The rookie mistake: expanding your circles with emotion. Internal value and margin safety. Valuation is the sum of the future cash flows. Buffett only buys businesses at a discount to their true value. For him, risk isn't volatility, it's the permanent loss of capital. Quality business bigger than cheap trash. He chooses the companies with high return on capital, strong brands, pricing power, and low capital intensity. Cheap, unprotected companies are traps. Patience and rare decisions. Most of the time, Buffett does nothing. He waits until the odds are overwhelmingly in his favor and then holds the business for decades. Rule number 6. Cash and option. He always keeps liquidity ready to buy during a crisis. When everyone else panics, Buffett walks in with a bag of cash. And there is an example right now what's happened the last years. Buffett extremely sell his stocks, increasing the cash volume. So you need to be careful too about the world economy. And rule number 7, anti-leverage and debt discipline. No margin, no personal loans against stocks. Even Berkshire's corporate debt is moderate. Buffett bets on the power of capital, not borrowed money. Why it works? Buffett financial magic isn't magic at all. 10% annually over 30 years, increase your capital in 17 times. But this only works for people who can stay consistent and don't sell their investments in fear. His strategy is not more analytical like psychological. He stays consistent over the years and decades. He invests only in the stocks that he understands, and that's bringing him to the point when he thinking only in the long-term decisions, because investments is the long-term activity and you cannot become rich overnight. Want to invest like Buffett? Here is his rules. Write down up to 3 industries where you truly understand the business model. Pick 5 companies and answer, how do they actually make money? Check their quality, ROE, cash flow, debt levels. Estimate intrinsic value, buy only when there is a discount. Write a 1-page investment memo before every purchase. Make no more than 2 decisions per month. No margins, every position should let you sleep peacefully. Keep a journal, date, idea, entry price, what will confirm or disapprove your theses. And the last advice is the most important. Journaling brings you to consistency, and consistency brings you to the successful investments. All those successful investors and all those successful traders always make a journaling, because they, as a Buffett, they don't try to predict the market. They just try to become consistent, and over decades they do the same things and follow their strategy, and just adjust their strategy depending on the things and the decisions that they made in the past, and just keep relying on their journal. Invest only in the things that you understand. Stay consistent, make journaling, and subscribe on this channel for my next videos.